there's these things of emotion. There's a lot of emotion in the market.
Yeah.
And this one cannot be correct one. Cannot be corrected one. Everybody, even myself, sometimes, when I don't know, in last year in March, when the market dropped like that, I can tell you a lot of good investors also they panic because
That's
that
true.
time I read a lot of articles. They say, oh, this time will be very bad. I think you better get out. Some very very good investor. In Malaysia, you look at you watch the YouTube or anything. They ask you to get out. For me, I think the time I also did write in the book, my second book, that we can't predict the market. There are so many factors. Right. The time I didn't even know that the U.S. government just keep on pumping money, trillions and
Yeah.
trillions of money, But I always say this: market is unpredictable, it's unknowable.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free.
Hello, everyone. Welcome back to the FIRL Podcast, best place for long-term stock investors. Now, today we also have another long-term stock investors that we are very excited to bring on. He is an author. He is a veteran in the Malaysian stock markets or just stock markets in general. Mr. kcchong, pleasure to have you.
Well, thank you for having me here. I don't know why me. I do watch some of your videos. You have a lot of very fund manager analysts. They are in the industry. I'm just an individual investor. But anyway, thank you for having me here.
Well, actually, we want people like you because I don't know, we always prefer the people who, like, in theory shouldn't be succeeding. Right? Fund managers in theory should succeed, right? They have all the background and all the people and the resources,
the pedigree,
exactly.
and all that.
So we want unique people who took unique paths, such as yourself. And so, speaking of path, right, maybe let's start right at the beginning, right? Let's go back to your childhood. What was a 7-year-old kcchong like?
Oh, I tell you, I like to talk about the old time.
Yeah.
I was born in a Chinese New Village, in Bentong. A Chinese New Village called Sungai Dua. I don't know if you heard about it. It's the car highway from KL to Kuantan. You will pass through that Sungai Dua.
Okay.
So in a Chinese New Village, kids like us, like what we say in Chinese, that we are born by the heaven and bred by the heaven. Nobody cares about us, because basically our parents, your times is much better. Our times, our parents are very, very poor. Actually, my parents given birth to me, they are still teenagers,
Oh.
So you just imagine a teenager, how the teenager know how to take care of children, and moreover you have sick children,
Wow.
So we are born very poor, and we go to school also poor, very poor facilities, So what we do, we just play everyday play, go and catch spider, catch a fighting fish, that kind of things So it was a tough life, but enjoyable, once a while when I see my father still tells me, say, wow, I didn't know how you all can survive, but but you all did quite well. I'm very happy. That's why actually in life, a lot of things we wouldn't know the destination. We don't know. There are a lot of things happening. I never know that I can go to university. After standard 6, when I was small, I have to help my parents to tap rubber. Bentong a lot, rubber tapper. Wake up at 4 o'clock. Go to sit at the back of a Vespa, go for 50 kilometer. Tap rubber, and then come back evening. So one day he just tell me after my standard 6, he told me, hey, Achoy, don't go and study anymore lah. Go and help me to tap rubber. Somehow the life changed lah. That I could able to go to secondary school. That time, I was from a Chinese primary school, so I had to go to a remove class.
Yep.
You know what we learned in the remove class when I was 13 years old? You know what I learned in English? Jack and Jill went up the hill to fetch a pail of water. At the age of 13, Humpty Dumpty sat on the wall. That kind of thing, So, when we on transition from primary school, Chinese primary school to English secondary school, those students from English school, they talk. We say, oh, what you fat. I don't know what you're talking about. Our English was so poor. So, as I said, life.
Yeah.
Very hard to predict, I graduated as engineer. I would say I did quite well in my engineering life. The other thing I want to tell you is that I am not a multi-millionaire from investing. Actually, I'm not like MJ. MJ is lucky. I had to work as an engineer for many years. That's where I earn my money.
Right.
And with the money I earn, is a preservation and grow it a little bit. That's how I can. I'm not rich. But I would say I'm quite comfortable in my retirement. Even 90 years old, I have no problem. So yeah, your question is that life.
Sorry, keep going on. Yes.
Life as a kid is tough. Tough. Yeah.
So where in your kid or your uni days or your work days that you got in touch with investing, where there's this thing called investing and I can multiply my money a lot faster. When did the realization hit you?
Let's don't talk about investing first. Let's talk about speculating and gambling.
Okay, let's do that. Right? Let's do that.
I was telling you that I was born in a Chinese village. There are a lot of bad influence, gambling, drugs, that kind of thing. When I was a kid, a lot of these people sit under the rambutan tree, then play blackjack, all those things. So I was having the kind of influence, So I go and gamble also with them, with the adult. How I get the money? I steal money. I stole money from my parents.
Wow.
I go and gamble. So I have this gamble habit. So even I went to school. I went to secondary school. I played gin rummy. Okay, gin rummy. Everyday gin rummy. So when I go to university, I play gin rummy too. Okay, then I graduated. I started work. I play mahjong. I started working in government. First 10 years because I got scholarship. I studied at MU. I got scholarship, so I have to work 10 years for government. So we play mahjong until next morning. Go and wash my face, brush your teeth, and then go and work. So that kind of gambling thing, right? So when I first started working, I worked in this government department called Drainage and Irrigation Department.
DID. I know.
DID
Yeah.
Or in Malay, it's JPT Jabatan Parit Tali Air. Now maybe Jabatan Pengairan and Saluran or something like that.
Yes.
And I work in KL, right? My first job was in this KL flood mitigation project. You heard of Batu Dam? I built Batu Dam. Starting from design until filling of the dam. I do this drainage. Batu River. The 3 rivers in KL. Flood mitigation project. So at that time in KL, there's also this influence. Okay, my colleagues. A few of them are actually I would say they're speculators also.
Okay. Okay.
So every time lunchtime, we'll go to Rashid Hussein. You know, Rashid Hussein was just very near to our place. That time was in Jalan Raja Laut. You're too young, you don't know.
Jalan Raja.
Okay.
Actually, that's the part of KL that most people don't go to anymore nowadays. Especially the modern,
is it right?
the younger
Raja
crowd lah.
Sultan.
Jalan Raja Laut.
Yeah. So we go there. So last time, they write on the blackboard one, what price. I think almost every day lah, And what do? Yeah, listen to tips look at tips and rumors, and then buy buy. Imagine, when we are able to go and see people writing the codes, that means that is working time, Working time. Actually, it was very bad, very bad for us. Yeah. So that's how I started speculating, right? In fact, in stock market, I started very young,
Right.
Shortly after starting working, it's already 40 over years, right? But when MJ talk about investing, maybe only about 15 years only.
Right.
The other 25 years is speculating.
So before you go on
it's
to
an
investing, right?
Pure influence, and
Right.
and proximity to the broking firm.
Yeah. Oh my. Yeah. Crazy. So before we go on to investing, what is your worst experience? Way back then. We a lot of people are my age and all that, just entering the stock market. We don't hear a lot of the war stories that you all had maybe 30, 40 years ago. So when you were still in your speculating era, what is the worst experience you had?
Okay, I still remember this clearly, because the certificate of this company still frame up and hang in my room. I don't know whether you heard about this Pan Electric.
Pan Electric,
1985, right?
Yeah.
1985.
1980 something, 1980
Yeah.
something, So that time, I think I bought 2 lots. This memory quite clear, I bought 2 lots. I think it cost me about $3,000, $4,000, 3,000, 4,000 ringgit. At that time, 3,000, 4,000 actually quite a substantial amount of money.
Can buy car already or not, Casey? 3,000, 4,000 ringgit.
No. Time the car probably about 9,000.
Okay. So 1/3 of a car lah.
9,000. Sunny is Datsun.
Datsun. 120Y. I still remember.
Yeah. So I bought the Pan Electric. Of course, by rumors. I know Pan Electric, it was controlled by, I don't know, you heard about Tan Kun Suan or not?
Yes.
Yeah, the MCA president.
Yeah.
Actually, the fellow go and chow. I bought the 2 lot of Pan Electric, said today. 2 days later, suspended.
Wow.
Just 2 days. 2 days. So I lost all of it. $3,000-$4,000. That time a lot of money.
Yeah.
But luckily, that time I don't have a lot of money to lose. But it's still a substantial amount of money. That was the most memorable one. Because the time, through the years, I saw there are a couple of them. You heard about Country Heights?
Country Heights, yes.
Lee Kim Yew Yin?
Yeah, Palace of the Golden Horses.
Yeah, I think sometime in 1990 something. There was this warrants, company warrants. Company warrants was selling maybe about $6, conversion price about $6. I'm just giving simply give a number.
Yeah.
And then Country Heights mother share was $20 now.
Wow.
$6 warrant, 1-to-1 conversion, $6 the warrant price, $6 conversion. This is a big frog, isn't it? Big frog jumping around.
That's right.
And at the time, a lot of this, a lot of a lot of tips. Because my neighbor, who's actually my brother-in-law, knows about Country High. They said the general manager was talking, hey, Country High will be very good. All these tips to buy. That's how I lost a lot of money on that also.
Wow.
So that is a lesson before I forget. There's no big frog jumping everywhere. Yeah. These are the 2 major ones. The other one is like, even very recently, about maybe less than 10 years ago, I still speculate. It's the gambling.
Yeah.
I still speculate on call warrant. Okay? When I talk about less than 10 years ago, actually I'm quite well versed in warrants. I got a Master of Finance. Okay? I can actually derive option pricing, the black short option from the basic I can derive, So I thought I'm very good, I am very good in option pricing, when you talk about implied volatility. Oh, very cheap, very cheap. Get caught also. Actually, I lost quite some money in call warrants, maybe 100, 200,000. Okay. So not easy lah.
Yeah.
Market. Or even though you know a lot of things, I can tell you I'm very good in option pricing,
Yeah. We'll get back to
just-
your finance background, your master's in finance. But before that, I wanna get your thoughts on how you then made that transition into investing. When do you realize, maybe I should stop speculating, or I speculate a lot less, then I go into more investing style?
I carry on speculating. As I said earlier years, I don't have much money. Later, after 10 years in government, I went to private sector. I worked for a public listed contractor. You probably know at the time only one public listed contractor. So I started to have more income. Then I was actually posted to Singapore as the country head, right? Especially in Singapore, I have more money. Okay, I have more money because everything is paid for. I got a company car, accommodation, everything paid for. Salary in Singapore, not too bad, right? And then CPF is very good, Now we pay 40%, employer 40%. So the time I got a bit more money, but still speculating. I still remember I actually have a private banker I think at DBS. That time easy one. You have 50,000, 100,000. You can get a private banker, right? So get a private banker. So every month I receive the report. I look at the report. I don't know anything. I read the report. Oh, they buy this unit trust, this field. They bought this bond unit trust. Okay. Next month come again. But I don't know anything. But I did notice that sometimes very often unit trust changes. Not even unit trust, the equity fund changes. Even the bond also changes. The bond fund also changes. I also don't know anything So I think that didn't do well. I think also lost some money because of all this transaction fee. So there's one thing I know. You cannot rely on anybody. Anybody. You got to rely on yourself. And also sometimes that time also I have this this unit trust agent. Or the time they were very aggressive. I think 1990s. They come to office. They say, so the time I don't know anything. They pester. Okay buy lah. Also don't know anything. I remember it's Ban Heng Lee. The Ban Heng Lee later become CIMB principal fund.
Ban Heng Lee Bank.
I also don't know anything. I look at the report. But eventually after 10 years, I find that there's not much change, in the NAV. Not much change, So if you think about it, the time the money was, the investment money come from EPF, EPF given, 5-6%. But the time I remember, maybe I don't know whether got 1% or not. So again, that is another thing I learned, is that you cannot trust all this thing. A lot of people don't know. They say, I leave it to the expert to do lah. They don't know the real thing. In my book, there is one article on unit trust, which I explain quite clearly. So cannot rely on that. Then later, I have more money. I invest more money in the stock market. I think in 1993, in the 90s, market was booming.
Yep.
I do make some money, but the time I'm not that kind of risk taker, so I don't make a lot of money. But luckily also I didn't lose money when the thing turned around. When the second board, when the 1997, the second board turned around. When 1998, turned around, I lost some money, but not much. And then after that, I think shortly I migrated to New Zealand. So every day I couldn't get a job. I tried to get a civil engineering job, I couldn't get. I worked as a supervisor for a couple of years. That time I don't look at the market too much, but I still have some money with one remisier in Kenanga. I think Kenanga. he told me, hey, Casey, you let me handle for you lah. Okay lah, you handle lah. The buy sell, up to him. But I realized later, I lost money lah. I think lost quite some money lah. Again, reminder, I also don't think we can trust lah. So what do? I told you I worked as a supervisor for a couple of years. I didn't like it. I went to university. Right? I study finance. Okay, I got this financial planning degree. And after that, I got a master in finance. I also got a master in finance, John.
Yeah. I know. We have your CV here as our interview notes.
I know you got two. I know you got two masters. I also got one. So I got a master of finance. I know quite a lot about finance. As I told you, I know how to derive a Black-Scholes formula from the basic, and I know about a lot of things. Those option, forward, derivative. I'm very good. In fact, I got a master of finance with distinction, top in the class.
Nice.
Unexpected. So, with the master of finance, actually not very useful. Also. All the time we talk about efficient market hypothesis. We talk about CAT-M, all these things. So every time people talk to me, market efficient man no point lah. Okay lah. Then because I got a lot of time, I do two things. I study finance. I read books. I read a lot of books. Right? Because library in Auckland, a lot of books. So I read a lot of finance book. Okay. The first finance book I read about, I think, is Peter Lynch, One Up on Wall Street. One Up Wall Street. That was the first one. Then of course later, Pat Dorsey's The 5 Rules, all those things. So I read, it's very, the reason they give very plausible how to actually make extraordinary return for the market. So I start to use the kind of principle. When I finished my study, actually I came back.
Okay.
I came back to Malaysia. I worked as a financial planner in the biggest financial planning company with the most FAR CMSIL license.
Yeah.
Professional, very professional. That is another experience I tell you, working in the biggest, most reputable financial planning company. Again, I couldn't survive that. I wanted to do comprehensive financial planning, right? But you cannot charge market. Nobody want to pay you to do financial planning.
Fee only. Nobody wants to pay fee only, right?
Yeah. So the company also push you, sell products, So you see the product itself. Hey, actually, if you're a good salesman, you make a lot of money, because you sell one product, upfront 8%,
Correct.
8%, 10%, 8% for you only, but for the company,
Yes.
Then you have these funds, from overseas one, only you are eligible. You, because you're high net worth, you're eligible. Like that kind of fund, right? One of them, I don't know, you heard about Dominion Fund?
Dominion? No, not familiar. Maybe before my time.
Dominion Fund is for high net worth. Only you a lot of money, then you're entitled. But that fund, after 2 years, was unlucky during 2007, 2008. It becomes zero.
Wow.
You heard of land banking?
Yeah, land banking, yes.
Can't even get back your money. So all those financial products, all lost money, Investor all lost money. I can tell you, all lost money.
Yeah.
Even you make money, when the market is very good, you will make some money, but your return is much less. So that is an experience working in a Eisen financial planning company.
Wow. Good insights. So I want to go into your book now, which is one of your books.
Wait, MJ,
yes.
I haven't answered your question yet.
Yes.
About
how do you shift? Yes, correct.
How do you shift?
Yeah, I read a lot of books, then I find that it's useful. So I use that. To invest. If you notice, John, you read i3. The time I starting to write in i3. About buying good company at cheap price. The time I mostly quantitative kind of investing.
Correct.
And actually that was actually quite successful. I'm not a deep down investor at that time. but just based on quantitative. And you can look at i3 lah. You know, my
I've been following you since
2013,
2000, I think 2009, that time, 2009, 2010.
2013. My first one was 2012.
Ah, I think there's another guy who was Malaysia Finance Blogspot. Sorry. There's another guy, another blogger, Malaysia Finance Blogspot. Yeah, sorry, 2009. Yeah.
Why is 2001
12.
3?
Okay,
Called
13.
G13 watch list. The time you know i3 got this competition. Your yearly competition.
Yes,
Yeah.
yes, correct. Still have right
Put out
now.
your portfolio.
Up to now.
Hey, I was the first one. You know,
Yeah.
2013, the first portfolio. No, together with another guy, i3vestor. You probably know.
Yeah.
OTB,
OTB,
yeah.
very
2013,
famous.
I got a
very
portfolio. 2013 second half, they call it 2013 second half portfolio. I also put out a portfolio, 10 stock. Hey, those two portfolio did extremely well. You know? After no, purely quantitative, purely quantitative. Like look at ROE, ROIC, and then PE and earning yields, that kind of thing. They did very well. They did very well, right? So because I was writing in i3, a lot of people, they put some good comment, but a lot also you kena bamboo.
Yeah, of course.
So you learn, you actually in the process, it's very good. You write, you think, and then people write, especially critical comments. You learn from it.
Yeah.
If you open your mind, you learn from it. So even from 10 years ago until now, I also evolved differently from the different principle. So that's how I go into real investing, MJ.
I have to ask you this very juicy question since you brought up certain interesting names. So you are i3 veteran. I think anyone who has been i3 for like 2 months will at least know who you are. What do you think of all these really popular i3 gurus or popular people like i3vestor, Koon Yew Yin? I think recently what's that guy's name? Was it Kelvin Tan? He got into a scuffle with the Yinsen. But what do you think of all these people? It's okay.
All these people, I know very, very well.
Yes.
Okay, please.
Very, very well. Koon Yew Yin, he asked me to invest for him. He gave me 10 something million to invest.
Wow.
Wow.
2016. 2016. But I think you probably know Koon Yew Yin's way of doing things and his behavior. Nobody can invest for him. Nobody. Nobody. Totally different philosophy. So I know him very well because I actually invested for him before.
I see.
One time he chow me, he sacked me. I was so happy. I was so happy he sacked me. The other thing I don't like about I'm not doing any personal attack.
Of course,
Yeah.
I never do
just
any.
the facts, just the context of
I
things.
never do any personal attack on him also, but I do attack his article. Okay, that was a few years ago when he's invested in Jack's Sendai, this other company.
Yeah.
Heng Yuan, keep on saying, I so good, you must borrow money, you must borrow leverage. Look, I borrow money. You see how my wealth accumulate. But actually, you don't know. I know. But Jack's keep on going up because he keep on buying. When he keep on buying, the share price keep on going to 150. Why? Because you keep on buying. You keep on borrow money. You buy. I think he spent about 300 million just to buy.
Wow.
What? So.
Okay, go on. Please go on.
You see, everybody got different way of investing,
Of course.
I don't judge people, but one thing I don't like is that when in a public forum, you go and encourage people to use margin, all these things. I don't think it's very good, right? Okay, so that's why if you look at i3, especially Jack and Sendai, I wrote a lot of articles about this because I see that it's not good, keep on promoting his margin finance, all these things, not very good, right? Kelvin Tan, he likes me very much, so I don't want to say bad thing about him. Okay. Kelvin Tan is a very deep value investor.
Okay.
Very deep value investor, and I used to be one basing on deep asset value investor.
Right.
I am no more. I am totally no. But he still give one as a very deep. I mean, he has his way I don't judge him. He probably make money in that. I don't know. Right? Digby, my very good friend, I think he also tell everybody that I'm his good friend. He actually took my course before. He said he learned the most from me. Actually, he at the book, my book, at the back, he wrote some comment also.
Yes.
Yeah,
I saw it. That's why.
So he's my good friend, still my good friend. I think he's very good in his technical. Fundamental, maybe still a lot to learn.
What
I
about
don't know. I mean,
what about
I don't know
Feng Shui?
anything about technical. He can
Huh?
comment
Yeah.
about my technical. I know nothing about it. I just put a little comment about fundamental. Maybe he should learn a bit more. But these are the things like that one. Sometimes whether either you believe in it or not, or
Yeah.
believe or you don't believe in it.
Right.
Yeah. What about Feng Shui?
Yeah, and any other people on i3 that you think is worth mentioning, good or bad,
Good or bad? Because Feng Shui wrote a review on the cover of his book also. So that's why I wanted to ask Feng Shui
Yeah.
first.
Who wrote?
Len Yan. Len Yan.
Oh, Leng Yan. Leng Yan is my good friend. If I'm in Malaysia, he still asks me to go for lunch quite often. Leng Yan, 我的前辈 he's my senior. I can only give good comment. Leng Yan, he started as a reporter, right?
Yeah.
He started very poor also. His childhood very, very poor also. And become a reporter. Then he start investing. And he actually earned a lot of money from investing. He has his way. He has his way. Mine may be different from him, but a lot of things quite similar. So in fact, if you look at my Facebook, recently I wrote about Koon Yew 5-yard stake, and I modify it into kcchong's ultimate formula. Koon Yew's ultimate formula is his newest book.
No, I can't read Mandarin.
We can't
that's
read
why.
Mandarin, that's why. And no
That's
one
why
wants to
we
translate.
ask you.
That's why no one wants to
It's
translate. We want to read also cannot,
His latest book, Stock Market Peddling, Ultimate Formula. So using a few some formula based on ROE, how much is to be, cash flow, growth, profit margin, and then PE ratio, and the other one is dividend yield. So he come up with a formula how to do investing. I think the formula is very good, because it covers both sides. How good is the company?
Yeah.
And then what's the price? Book. So a very stringent requirement. I think it's good. But sometimes old people, I'm also old people. Just sometimes we very hard to learn new things, or go for new market, that kind of things. But Koon Yew is a real example. He make a lot of money from the stock market. There's no doubt about it.
What would you say are some of the differences? Because you mentioned that you look at things slightly differently from him. So what would you say some of the big differences?
In terms of, for example, I like to use the, people might say too complicated. I like to look at everything at a firm level, the firm level. That means you look at ROIC, you look at EBIT, enterprise value, that kind of thing, maybe slightly different. But mine is a bit complicated, hard to find the things, but the public like simplicity. Sometimes simplicity is good also. Simplicity in investing also good. ROE very simple. Everybody can calculate. You talk about PE
Something even
ratio,
calculated for you. That's why people like it, ma.
Yeah,
But
PE
ROIC
ratio
you have to
very
calculate
easy.
yourself.
Yeah. They are. I think in certain ways simplicity also good, but sometimes do something too simple, you're unlikely to make extraordinary profit, Because too simple to me, if everybody know about it, how can?
That's true.
I mean, I'm not saying I'm right, I'm not saying I'm right, And then I tend to look at, now I actually evolve. I look at qualitative part more also. You talk about 10 years ago, I never look at growth. Actually, I don't like growth, because I read a lot of books that talk about growth. The growth, you eventually you buy too expensive, and then the growth doesn't come through. You lost, it's double whammy. You lost a lot of money. So I was brainwashed with it, But actually, growth is a good thing, You can actually, if a company grow, if you're right, because growth in the past, there's no use. You see, it's a growth in the future.
Yes.
If your projection of the growth of the future is right, then you make a lot of money. So now I look at this type of qualitative thing, growth. Look at the the industry. Look at the trend, the secular trend. I'm now more in US market now also. Hong Kong, US. Although I'm still in Malaysia. Although only very recently, I went to US. Hong Kong maybe a few years ago. That's where the business good business that you can find to
Right.
invest for long term. Because eventually investing should be long term. Malaysian stock market, I don't think it can be long term. Everything is cyclic. Everything is cyclic. Almost all companies are cyclic. Whereas US, you can have some long term kind of growth company.
Right.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
Okay, now let's get into your book, right, which I find very interesting. I've read once, but I still needed to refresh myself, and John helped me out with some very, very good points. So you mentioned earlier on about the efficient market hypothesis, and in your book, when you were pursuing your your in a way second career in finance and your masters, right? You came across this thing that that the universities treat as like a Bible truth like that, which is efficient market hypothesis. So for those of you all listening who are unaware of this, is basically saying that because there's a lot of information and a lot of smart people in the market, so that means it's impossible to buy an undervalued company or an overvalued company because the information is all in the price. If it's at PE of 37, means it's a correct PE, let's say. So
Unless you take higher risk.
unless you take higher risk, right? So that's where they tie into the idea of high risk, high return. And so they want to optimize their return, so they go 50% stocks, 50% bond, things like that. It's a very complicated. There's books and books written out this, but I want to get your thoughts as someone who has been on both sides, right? Like John and I, we've never been in the financial, the academia of finance. So you have been there, and you're also a practicing retail investor. So what are your thoughts on EMH, or efficient market hypothesis?
What do I think about what?
Efficient
EM,
market.
efficient
Are
market
you a
hypothesis.
proponent of it, or are you
Yeah.
against it, or
Where are
do you
you?
think it actually works? Where are you?
Yeah.
Whose side of the fence?
It's good that I am at both sides. I am academic before. I actually a practical investor now. Yeah. I think efficient market hypothesis, there is certain truth in it. That's why in my course, the first book I let Archon to read is the Random Walk Down Wall Street.
Mikhail Burton, yeah.
Okay. Because somehow it's quite true. There are so many smart people in the stock market. There's so many MBA, so many PhD people, so many analysts, everybody looking at the market. So with this, the market is supposed to be efficient. But there are other things in it. Like in Malaysia, I don't think the market is that efficient. You look at i3, I don't see people doing right things like I do. Hardly fire, right? There might be some good value investor along, but they maybe follow different path. They're good investor, good fundamental investor, but different path. So like Malaysia, I don't think that efficient. Okay, Hong Kong, Singapore, US is definitely efficient, but there's these things of emotion. There's a lot of emotion in the market.
Yeah.
And this one cannot be correct one. Cannot be corrected one. Everybody, even myself, sometimes, when I don't know, in last year in March, when the market dropped like that, I can tell you a lot of good investors also they panic because
That's
that
true.
time I read a lot of articles. They say, "Oh, this time might will be very bad. I think you better get out." Some very very good investor. In Malaysia, you look at you watch the YouTube or this, they ask you to get out. For me, I think the time I also did write in the book, my second book, that we can't predict the market. There are so many factors. Right. The time I didn't even know that the U.S. government just keep on pumping money, trillions and
Yeah.
trillions of money, But I always say this, market is unpredictable. It's unknowable. I follow Howard Marks.
Howard Marks, yeah.
Yes.
Market is unpredictable. So if I have the spare money, I keep invested. Okay, all right. I'll keep investing. Right. If I don't have the money, I need the money. I don't put the money in the stock market. Yeah, because it's unpredictable. It can be very bad. Like last year March, it could be very very bad. But the market just turn like that. Just turn like that. So it's very hard to predict the market. So what is the question again?
Yeah, no. We just wanted to
that's
hear
good.
your thoughts. It's good.
That is your thoughts. So if
yeah.
I summarize, correct me if I'm wrong. What you're saying is that the market is mostly efficient, but there are moments and pockets that people are not rational at all. Am I right to say that? Is that your view?
Yeah, very very common thing. The market over the long term is efficient, but
Yes.
there are times, very often because of emotion.
Yeah.
So market.
And you raise a very good point, which is over the long term, because when people who come up with the theory come up with their conclusion of the EMH, they're looking at very broad and very long data sets, right, from 1940 until today, and then they can conclude. But then when you and I go into the stock market, we're looking at the screen, the trading screen, which is today's price, right?
Yeah.
So that's why it's very different. That's a very good, interesting way of putting it. Now, I want to go to chapter 5 of your book, page 83. So you see, I told you we read your book. So one famous line, actually two famous lines is number 1, think risk first and risk control. And number 2 is the higher the return expectation, the higher the risk. So these are very interesting phrases that I don't hear very often. So maybe you want to start with the first one. Think risk first then and risk control.
A lot of these things I actually read from books and follow those seafood. I think that's from Howard Marks. Right? Think risk first, risk control. A lot of people think that they can make a lot of money from the stock market. They want to go to the stock market because I want to make money. That is
50%
the first thing,
a year, right?
Yeah, but the right way of thinking is that you must think about not losing money first, right? Not losing the money. So what do you do? Take care of the downside.
Yeah.
The upside will take care of itself, right? That's very important. Why? When you come into the market, you think you want to make a lot of money. Then you take higher risk already. You say, wow, this super investor say this one very good one. You buy, and you follow lah. He sell. Then you lose a lot of money, right? And then you think about, wow, I want to make more money faster. What do? I get margin finance from bank.
Yeah.
So instead of make 100,000, I make 200,000. But black swines are very common nowadays. They're very common. Very common. I don't know you realize or not, the black swine is so common, right?
Yeah.
There are a lot of now I follow US market quite a bit. There are this very high growth company. I think beginning of the year was very good in the price. Suddenly one day can drop 20%. You don't think some of the high growth potential shares drop 20% one day.
Yeah.
So if you are on margin finance, 20% you got to top up with
Yeah, margin call already for sure.
Yeah.
Margin call already.
So you want to top up or not? Wow, you want to top up wow, whether you drop again, your hand also shake, you know. So what you do?
Yeah.
Let the bank sell.
Yeah.
Then you're supposed to be a long-term share. Now because of margin finance, the bank force sell you. Yeah. So that's very important, you know. Don't think about making money. Think of the risk. Take care of the outside. How to take care of the outside? When you think about taking of the outside, then you follow what I wrote in my book, lor.
Yeah.
Yes.
Actually,
Look at the
that's
good business, you know, stable business, you know, and not selling too high at price, preferably cheap. And then you take care of the downside already, right?
exactly.
And that I noticed, you may not make a lot of money, but at least you make satisfactory return, you know?
Correct.
Yeah.
And this is a good segue to the next statement that you made within the same chapter is this. I think you separated systemic and specific risk. In a way, you mentioned that systemic risk is something that is beyond your control.
Yep.
And specific risk is something within your control. But I feel that a lot of investors don't even know the difference between that. And more importantly, investors focus on the wrong thing. Am I right to assume that? Meaning, instead of focusing on specific risks, they go and focus on systemic risk, meaning market themes, market momentums, rather than focusing on what they can, in a way, eliminate the risk by, reading up companies, understanding the downside. And then here they are, they go and say, oh, Malaysian political system, US, different macroeconomic policies and all. Those are things that are beyond their control. Am I right to assume this? And Casey?
Yeah, systematic risk is basically those you cannot control. Things like
exactly
macro kind of thing. The Fed action, the political situation. Those are systematic risk. In stock market, that is definitely there. This is something academic. Academic systematic risk like macro risk, the economic, financial crisis, political things. You cannot control one, right? Whereas the other one is specific risk. Is I think specific to the company.
Correct.
Specific to the company. So you look at the business of the company. You can control the risk somehow, this company very risky, very high debt, or very, then I don't invest in it. That kind of thing you can control. Yeah.
Correct. No,
Yeah.
And even though it's academic, I feel that is a bit underrated. A lot of people try to focus on things, especially retail investors. They keep on harping on things they can't control. But they don't focus on the things that they can control in a way. Voting with your feet, for example, don't buy this company, don't buy into hype, rather than
I was saying last year March, a lot of economists, and a lot of very, very well-known investors in Malaysia, they say get out, because it's very bad, But you look, you don't know, the Fed action, the vaccine, there are so many, this macro thing, too many factors.
Correct.
Casey, your example just reminded me of a quote I heard recently, which is that economists successfully predicted the last 4 out of the last 3 recessions.
Yeah. In fact, economists, there are a lot of very well-known economists in the world. Half of them say this, half of them say that. Right? So who to believe? Even those half who say correct one, you cannot benefit from the market also. Even you're right also, you cannot benefit from the market. So,
and that's the worst. You use so much of your brain and then you don't make money, right?
Yeah.
Right. So, one word you also use in page 91 of your book is lemons.
Yeah.
Now, you mentioned 10 characteristics, and we're not going to go into all of them because of time, but which do you think, right, is the most common mistake that most people, retailers or whoever, fall into? Which one do they ignore the most, basically, that you found in your 10 years of writing for i3, talking to people and things like that?
The most common mistake.
That means you listed 10 characteristics of a lemon company, which is, for those of you who are not following cars, this term lemon is actually to describe a lousy car that always give you headache, right? Yeah, so a lemon stock is actually a stock that always gives you headache. Of the 10 characteristics, right, Casey, which one do you think they ignore? That means they keep on missing.
The most common
one-
mistake, you know.
Which one is the most common?
Yeah.
Hypes. I give you some example.
Please, even better.
Hypes. I don't know whether I use the right word or not. Just say like last year, you know about this company, Green Packet.
Green packet, yes.
So there are a lot of hypes on it, a lot of
Hype-
news about it.
Hypes. Okay,
Hypes.
hypes. Okay.
Uh,
HYPES
Am I using the
are
right
hypes.
word?
Yeah. Correct. A lot of hype.
Hey, I told you, I 13 years old, I learned Jack and Jill up and up the hill.
No, it's a very
Okay.
good. It's a correctly. It's the correct vocab for it.
Okay.
Hype.
So you look at Green Packet. I have an article in my second book.
Okay.
I think I talk about the warrants. Green Packet, the share price jack up to 150. The warrant conversion price, I don't know, 60 cents or what. And then the warrant price was 30 cents. So add up 90 cents. But the mother share price is 145, you know. Okay. So another big frog, big frog jumping. But I'm actually talking about the company Green Packet. You know, Green Packet, so many years. I hope this CC Pan don't go and catch me.
I lost a lot of money on Green Packet also, Casey, don't worry.
You know, over the years, you know, CC Pan is a very good talker. You know, said, I'm going to do this, my company, you're going to be like this. And you look through the history, every year lose money. So last year, they talk about, wow, they're going to do this KYC, they're going to acquire this, they're going to what. So in my WhatsApp group, that's my classmate, MU, all very highly educated people. I say, KYC, they're going to go to university. So this one very good, very good. So a lot of hypes, people talk about it, So invest in it. And look, I think Green Packet now, last year was 150 a top peak. Now I don't, how much? 30 cents? 20 cents? 20 cents probably. I think it's 20 cents. The warrant price from don't know how many 60 cents now to 2 cents, 3 cents. So these are the things in the market, a lot of hypes.
Yeah.
Don't follow the hypes. Okay, it's good to listen. Okay, then go back to do your homework. Like Green Packet, you look at it. All these years, they are losing money, and every time they talk about this, you look at the report, they will know every year they talk about this topic, but every year lose money. Every year, that's a hype. I wrote a lot about these lemons. My first article was my Christmas reflection of investing in the stock market. The first article in i3. There are a few characteristics. I think you probably know what I'm talking about.
Yeah.
The other company I would like to give example is London Biscuit. I wrote
Oh
a
yeah,
lot of articles
that
about
is
London
a
Biscuit.
good example.
I wrote a lot of articles about London Biscuit. So quantitatively, what you need to look at. Actually, London Biscuit is a very good example. Excellent case study.
Case study, correct.
Growth, very high growth. Okay, compounded growth maybe 20% over 10 years, 15 years, right? But you look at the profit also go up, profit also go up.
Yeah.
You look at the cash flow from operation also go up,
Correct.
I don't know, you notice or not, cash flow from operation also go up, right? But if you look at the free cash flow, then you know something, right? The free cash flow, right? But basically, like London Biscuit, you look at a few things. What is their ROE, right? High good, but it's ROE. ROE 3%, 4%. What does it mean? When ROE 3-4%, that means it's below the cost of capital, right? When a company grows very fast, at a return below its cost of capital, is actually a big shareholder destroyer.
Yes.
Okay. Then, because you look at cash flow operation, very good. Okay, but you look at free cash flow, why so poor? Every year negative. So over the last few years, probably free cash flow negative a few hundred million. Why is it like that? Then you look at the bank borrowing, each number of share issue keep on increasing. Bank borrowing keep increasing. Why? Because there's no cash flow. People look at earning, not like growth, very high growth, but also earning, but no free cash flow. That is an excellent example. Actually, it's a case study for university.
Yes.
So important lah. Look at ROE, or you look at ROIC or ROE, whatever, cash flow. I always say lah, the three things very important for a company is that growth. Okay, growth. Then return of capital.
Yeah.
And cash flow. These are three important things. If a company is good in cash flow, good in ROE, not good in growth, okay, it's still okay. But a company is very high growth, but consistently low ROE, and then especially no cash flow, then you sure die one.
Yeah. Actually, their cash flow, even though positive, KC, I'm just looking up from my financial data provider. It was stagnant. Even though it was it had positive cash flow, it was stagnant. And like what you rightly pointed out, I think the bank borrowings, equity issued was just on the rise. I think the other point that you brought up was actually the receivables. This is where I wanted to probe deeper, actually, KC. If they had so much receivables, what were the accounting tricks, in your opinion, that they could still squeeze out positive cash flow, even though receivables was going higher and higher every year, for London Biscuits? What were the tricks that they played, actually, from your opinion?
The cash flow, from operation, not free cash flow. Cash flow from operation actually is not going down. Is because there is high depreciation.
Correct.
Depreciation is
correct.
at the back. Depreciation at the back. They keep on buying equipment, the property, plant and equipment. They keep on buying. Exactly. So every year the depreciation very high. So when you add up, you get the high cash flow from operation.
Yeah. Actually, I wanted to tease that out because you pointed out also in your book that they were just continuously buying, and then you're thinking, aren't they making biscuits? Hap Seng doesn't seem to be buying biscuit machine every year, and then this guy is buying machine every year depreciate.
Yeah. I use the company to actually to compare with London Biscuit in my course. Apollo Food. You see, Apollo Food is almost the same kind of business.
Correct.
Their property, plant and equipment is only a small fraction of London Biscuit.
Precisely.
But people are earning good return, stable return, and stable cash flow, very consistent, high dividend. So it's actually a very good comparison. If I am a lecturer, I will use this case as an example, case study. Really. Of course, the other case, you read my book, is like K&M.
K&M,
K&M. It's exactly the same thing.
Correct.
Years ago in 19 something, high flying. A lot of fund managers will get caught. A lot of fund managers get caught.
Even today's Sabah, KC, I'm pretty sure you follow the Sabah dynamic. I'm pretty sure
Sabah dynamic is a bit too early to tell, actually. Actually, you look at the day sale outstanding. I mean, of course, when revenue increase, day sale outstanding will go up.
Correct.
So actually go up correspondingly. So you cannot see yet. Actually, I cannot really see yet. I think maybe too early to see. But I mean, you cannot say this KPMG, Big Four, they don't know anything. They should know something. Right? But too early for me to see, because, as I say, when revenue go up, receivable will go up. Right? So the day sale outstanding is not really above the industry average.
I think it was about 100 something, because it was something that MJ and I
120 days. 120 days, I think.
Yeah. It wasn't that high, actually.
Yeah, not that high, It's according to
I
the
think what
industrial
people don't like is, or at least those who don't like Sabah, is that it is, I think one is the owner is kind of like promising, like, or doing like so many things at once, going to the moon, then going underground some more. And but also that the collection of their projects, I think people are very worried because a lot of them are in the Middle East. But if you look at the percentage of that they collect, is quite stable. So the other side is saying that, yes, it's true, but Sabah Dynamic will collect the cash. It's just that it's not going to be at the levels that might comfort you, but they will collect the cash eventually. The question is whether when only that's it. But anyway,
I think a lot of things involved there, a lot of complicated things there.
Correct, exactly. So
I can't pass a judgment yet on that.
Understand.
Yeah.
Good point. So now, page 116, you talk about the principles, your principles of value investing. Now, there's quite a few there. I don't want to go into all of them, but I'll just read it out for those listening, right? Price is not a value. Mr. Market is a crazy guy. I think we don't need to explain too much on that. Every stock has an intrinsic value. Only buy with a margin of safety, and diversification is the only free lunch. I don't know about John, but for me, the one that I want to hone into here is actually diversification is the only free lunch. We all hear that there's no such thing as free lunch in this world, right? But you seem to think slightly differently, right? You think diversification is a free lunch. And why is that the case?
Okay, let's first talk about theoretically. Theoretically, when you have a portfolio of bond stocks, I don't know. You heard about efficient frontier?
The
in finance.
In economics, they call it the production possibility frontier. That one I know lah, but I don't know in
this
finance.
is efficient market frontier lah.
Okay.
Efficient frontier is that frontier where you get the highest return at the same risk, right? Or the I can't remember what was it. Anyway, theoretically, okay, if you want to have high return, you incur high risk. Okay, you want to say you want to be very high return, high risk, but there is a certain so this involved in say like a portfolio of bond and equity lah. There will be a point where certain amount of bond or certain amount of equity or say like all equity lah. You will have there will be a point where you have many stocks in a portfolio. Their what they call that, the risk. The risk in academic is measured by standard deviation.
Yes, correct.
Deviation, so you have a lot of stocks, with the different standard deviation. There will be a point that it will be the highest return at that certain risk level. Okay. So you. What do I say that? The other thing I want to say is that about this security market line. When the risk and return in a straight line going up, right. So if you want to be higher return, then you take higher risk. You buy those stock with better higher variation with the market. They call it beta.
Beta.
Right? So
higher volatility in the market, beta. Yeah.
So theoretically, there's no free lunch. That higher risk and higher return. Practically, same thing lah. If you want to say like you, how do I say? You want higher return, you tend to buy those high risk stock, right? But the high risk stock can cause you problem also. Eventually you might actually lose a lot of money. So in that way, that's what I'm trying to say lah. There's no free lunch lah. No free lunch, right?
Okay. Yeah.
I don't know whether I answer your question or not.
Yeah, it's okay. I think if they want a more concrete answer, the best thing is to buy a book.
Yeah.
And read it. That's it.
Yeah.
Yeah. I mean, what we are trying to do now is not so much regurgitate the book, but actually is more to tease out key learnings from the book and try to distill them for the audience. Because when John introduced me the book, John Lim, I'm trying to bring him on the podcast, by the way, KC. Can you kick him a little bit? He's trying to no lah, why you want to? I said, you've done a lot of service to the Malaysian finance community because he's published so many finance books, and I feel that it's good. I did comment to him, KC, that your book, if you're not an investor, the first one especially, if you're not an investor and you don't know your fundamentals, right, you read this book, it will be a struggle. Because I noticed that, we, MJ and I, we also coach and teach people about how to read financial statements and all that. I find that this book is more for the advanced, slightly more advanced. And what he did share with me was that you wanted this book for your students. So your students wanted more than just the basic things. And I found that it's good because if you are asking someone who just started into stock investing, don't know basic accounts, don't know basic concepts of value investing, they will struggle to read this book.
That's true.
my
That's true.
honest-
That's why actually before I publish the book, I also think, hey, this book I don't think can sell lah. Cannot sell one lah. This book how to sell, you know. It's all a lot of academic thing and quite difficult, you know.
Yeah.
But actually, it's sold quite well.
yeah, exactly. Because
Okay, John.
y-
Before now, I remember something regarding MJ's question about no free lunch.
please.
Okay, can I answer that?
Yeah,
Yes.
please.
Yeah. Okay, I take an example. There are a lot of bloggers in the blog like i3 lah. They say, I write this article. I want to help you to make money. Right?
Mm.
You think there's a free lunch for that?
Nope.
Okay. I play golf with my golf kaki. They told me, hey, Casey, hey, I got this fund, this thing, you know, investing in, I think foreign exchange, trading, you know. I said, how much you get return? Oh, 5%. Oh, 5%. Okay, good. I said, how much you get? He said, 5% a month.
Ooh.
Wow. That's fantastic. No, I said, got such thing, got such free lunch. He said, yeah, you know, this guy very good in foreign exchange trading, you see, very good one. So we always make money one. Really? So I say, no free lunch one, no free lunch one, I tell you, people give you tips, free lunch, you make a lot of money. I don't know, I don't think so. There's no free lunch. That's what I mean, practical. Nobody gonna make money for you in the stock market. I wouldn't make money. I wouldn't try to help you to make money. What for? Why should I help you to make money, right?
Yeah.
Right?
Yes.
I must help myself to make money, or I make money already. I donate to those poor
Charity
people.
or
Why should I
whoever lah.
help you to make money in the stock market? Got such free lunch, right? Right? Or
Actually-
just like the example I give, green packet warrant, a country high warrant, free lunch, is it? Right? You buy the warrant, you send for conversion. You know, last time conversion was 2 weeks. You know, you send for conversion,
Wow,
come
so
back, you
fast,
sell, you make a lot of money.
Yeah.
It's free lunch lah. Got such free lunch or not? Actually, that's what
Yeah.
I mean, MJ. Just recall.
Very
Okay.
good. Very
Yeah.
good. We have actually so many more questions on this book, but I think I'm gonna cut short some of them. You know, in terms of dividend yield, I think it's a very controversial topic in just global investing discussion, but in Malaysia especially, because somehow lah, you know, I have a lot of relatives, you know, they like to buy Astro, right? They say, hey, Astro dividend yield very good, you know, since IPO still holding up to now, you know, still very good because the dividend yield is very high. And their head is like, hey, you know, it's like FD, right? I get 7%, FD, I only get 2%, you know, or whatever the dividend yield is now. I can't remember. I've not checked in a while. But you also talked about how dividend is actually a very good metric, because you quoted a book that we've read as well, which is Dr. Neo Soon Kien's book on how the future dividends of a company actually determines the future share price. I'm paraphrasing, but that's pretty much what it is. So maybe you want to, you know, paint us a clearer picture on your views of dividends.
Okay. Dividend yield is basically, you know, when a company pay dividend, it's generally because the company got no use of the money so they
Yes.
distribute the money. That means there is no growth potential, no high growth potential. That is a one shortfall. But a lot of people, especially retiree, they have this thing thinking
Mentality
that,
lah.
I buy dividend yield, so every month every year I collect dividend. Good for me, I can spend the money. But they don't think about actually no dividend yield. If the share, I can sell a part of it. I get money also, right? So it actually suits certain people and suits certain situation only for
Yeah.
retirees or those who want regular income. But for regular income, as I said, not necessarily you can actually sell a part of your share. And also like in country like US, I don't think you should buy high dividend kind of company because you will be taxed. You're holding tax 30%. Actually, your wealth actually decreased by 30% from the dividend. Not very good It's better to buy high growth or the money reinvested properly into the company and make more money. That's better But I did say something about, okay, you want to go for high dividend yield, you got to look at a few things. Number one, payout ratio. If the payout ratio is high, there's no growth potential for the company.
Yes.
My good friend Koon always say, no growth, no buy. No growth, no buy. So high dividend company are probably no good, but not necessarily all the time, because some company give high dividend because they have high return of capital. Right?
Correct.
Right?
Correct.
High return of capital after distributing part of the money as dividend, they still got money retained to growing the company, right? Right. So must have a low payout ratio, not higher than certain amount, so that the company can make use of money to reinvest for the business. Then I also look at things like there must be I think I talk about growth potential, that kind of things. I don't know what I talk about. If a company dividend going up, growing dividend would be better growing dividend. But of course, earning must be growing also right?
Correct.
Right. There are a few more things I talk about. So there are some caveat for high dividend yield strategy.
Yeah.
There are some caveat. But actually, as I said, my investment principle also evolved a little bit. I actually don't look at high dividend yield companies anymore. But I wrote it because it is good for certain people, certain people, certain risk profile. Right.
Understand. No,
So,
because I enjoyed Dr. Neo's book, and in a way, he's trying to paint a picture where dividend is proof of income rather than just having the income.
A signal.
As a signal. Because I think in the past, when he wrote his book, I think it was 1984 when he wrote his book, corporate governance was not as good, I feel, as today. And also, when earnings are retained with the company, as an investor, there's very little security that you get from the earnings that they're growing, And I think that's where in the past, dividends is really a proof. Whereas today, like what you rightly pointed out, I personally don't like companies giving me dividends. I rather see them work, because my father was in the education department for many years, KC, and his stress will always come November, December. You know why? Because he hasn't met his spending budget for the year. Because he was into developing computer systems for schools and all that. And then I parallel that with my investing experience. If the company is lazy, that means they don't know what to do with the earnings. That means that's why they distribute it back. That's my thought process. I may be, differing in a lot of people's eyes, because some people, like what you said, they want the earning. But I don't like companies giving me dividends because they're being lazy with the money. They're not growing the capital.
Yeah. But, I give some example of some companies, if they give dividend, will be very good. Kuchai Development.
Kuchai Development, property developers.
Kuchai Development, I tell you, is cash and cash equivalent easily 3 times its market cap. Okay, if Kuchai Development, I think give half a cent. I don't know, half a cent dividend, that kind of thing, But if you give 10 cents, you can afford to give, then the share price will go up.
Oh, agree. I mean, like those companies that are so rich in cash but don't know what to do with it, and then don't want to pay dividend. Those are the kind of companies that
and they never grow the company. They never grow the company. The money
exactly.
They keep in their balance sheet. I tell you, one of these days will gone. I will tell you, guarantee. One of these days will gone. Right. The other one, I am a big fan of Insas.
Oh yes. I know you talk a lot about it in both your books. First one and second one. Yes.
Insas. The ordinary share it holds easily 2 times its market cap.
Correct.
All right.
Correct.
And its other business also doing well, and also a lot of cash in the balance sheet, But last time, give maybe half a cent, 1 cent. But now maybe give 2 cents, right? If Insat give dividend 5 cents, 10 cents, its share price go up.
Right.
Insat, this is another company which I used to invest, but this other company I gave up already. Why? like that. Recently, last time the company issued this preference share warrant. You know why do they do that? Now they issue again. Why do they do that? They just want the major shareholder just have the warrant to control. They keep on control the company. They keep on to control the company. They don't reward the shareholder. I tell you, one of these days, this money will gone. One of these days. Yeah.
And it's good. It's a good segue because there was a strategy that you post in your second book on page 234, right? It's about asset-based investing strategy in which you talk about ICAP, you talk about INSAS, right? In a way, am I right to say that the concept you want to portray is that these are value traps because all these controlling shareholders are not open to, in a way, growing the company, not open to allowing other people or fresh ideas or new business ventures to come in. And it's like stuck, trapped in time. It's not growing, don't want to pay dividend, controlling shareholder, don't change your management. And, it's like what you said, waiting to.
I use INSAS example in my book. It's more on a strategy, asset-based investing, then the negative enterprise value investing. These sort of things will be useful for other market. I have invested a few shares in Singapore stock market. Actually, the company went private, and the shareholder actually quite well rewarded. I think the most recent one is Dutch. I don't know about Dutch.
Dutch. Yeah.
Yeah, I think privatized. I think privatized was 50 cents or something like that. Quite a good return.
Understand.
So this strategy is actually workable for efficient market
Efficient market, correct.
Not in Malaysia
if the owners don't want to let go, don't want to privatize, then it's a bit tough Or even examples of Hovid, Casey. You mean Hovid? They privatize at a lower value. They privatize at a lower value comparatively to what it could have been because they discount the asset so much or they discount the NTA so much. They take it private by force. So in a way,
it will be likely what happened to Kuchai or INSAS. It will be likely. So you're wasting your time, your opportunity cost. Right?
Yeah, agree. MJ, back to you.
Yeah, actually, you. I didn't know, John. He mentioned ICAP in his.
He did.
So do you actually think ICAP is a value trap? Because be careful what you say, right? Because you know who's behind.
Something will come at you.
I written a couple of articles in i3, so ICAP. This Warren Buffett in Malaysia. Initial years in I think 1990, was it 20? Before the financial crisis,
2005,
early 2000, actually did very well,
Yes.
Extremely well the first 2-3 years. So he went into his head, is that Warren Buffett in Malaysia, but actually, and all the time he market as a value investor. Hey, investor, what is your job? Is invest in the market. No, you tell me 2008, 2009, there no share to invest. You tell me in 2000 until 2000, all this year you tell me there's no share to invest. Come on, there are 900 over stocks in Malaysia. I personally have invested quite a number of stocks doing quite well. Right. You tell me there's no share to invest, and what is the role of a fund manager, right? So, what I heard during the AGM, there are some people who question what happened? These people who try to question, they were shut down, by who? By other people, They treat the fund manager as God, How can you criticize my God, This is a company, you tell me how? At this price now, less than $2. Asset price is $3 over something for an open-ended fund.
A close-ended.
For a closed-end fund, when the discount is 30%, actually is an excellent opportunity to buy.
Arbitrage. Yes.
Everything is in cash and cash equivalent,
Yeah.
But I think no future. I think very hard. Very hard. Sorry, I'm not criticizing. You know.
No.
But-
Actually, your comments I think are mild compared to. You remember there was a time when there was almost like a hostile takeover. I think that was the early years of. When was it? MG, I think you may know this better. The American activist investor demanded a board seat at ICAP.
Yeah.
KC, I'm pretty sure you remember
Yeah,
that, right?
yeah.
Yeah,
There was this
sure.
debacle lah.
Yeah,
I wrote an article on that. I tweet. I wrote
So-
about 400 articles lah. The last article was 1 year ago. Since then, I didn't write anything already lah.
I see.
Actually, writing is good, you know. The other thing you talk about
Yeah,
investor, writing,
Yes.
you know, it organizes your mind, you know, as I said.
100%.
Yeah.
And then you
Totally
kena
agree.
bamboo, you know,
Yeah.
you learn.
very aligned to UKC. We
Totally agree, man.
Yeah. Okay. One question. So we
What's
move
your
on.
question?
Yeah, we
To
move
the next
back.
book, right?
Yeah, next book. We move to the next book where the title of the book is the Profitable Investor: 20 Most Important Lessons for Investment Success. You do it like a Q&A, which I kind of like. But I think that my personal comment to this would be, if investors want a more systematic book, I think they should read other books, then come to this book. Because this book is already, you are making assumption that they already have basic understanding. Am I correct to say this, Casey?
You see, this book was written because, you know, when I first published my book, I promised those buyers, ask me any question. So I collected a lot of questions. Yeah, I collected a lot of questions, and then I just answer. Good lah. I collect all the questions that I can publish another book. But cannot make money one. I tell you, cannot make money one.
Yeah. Align. So this first part I want to ask you about is with regards to macroeconomics. I know we touched about it briefly. So on page 9, you said you're an investor, you're not an economist. Now, you also mentioned a little bit, and I want to get more thoughts from you, is that as a bottoms-up investor, how much should an investor actually factor macroeconomics into their investment thesis? How much should they actually spend time on understanding macro in their investment thesis?
Actually, to me, I'm a bottom-up investor. I do read about economic news. I do read. Actually, I read a lot of things. I do read about macroeconomic things, but I never place much emphasis on that. So I, as I say, I'm from bottom up. I look more on the industry, the company, you know, more. Not I don't. I do read.
Okay, great. So I think that was the answer I was looking for, because in a way, understand macroeconomic factors, but it should not take up so much weightage in the decision when you invest in a particular stock.
Because why? It's uncertain. It's even okay, like, you know, inflation, you know, interest rate go up, When interest rate go up, you know, because investing, you actually, especially growth investing, you discount the future cash flow to the present. If interest rate go up, the discount rate be higher, then your present value will be lower. That is theory, and it's important. Important to know it.
Yes.
But there are a lot of factors, you know, when
Correct.
inflation comes in, you know, things are more expensive, products are more expensive. Maybe the company make more money.
Yeah.
Very hard. Very
What
hard.
if they have pricing power? There's so many things, right? That
In fact, let me tell you, I read a book by Ken Fisher. You know,
Kenneth Fisher. Yeah.
You know Philip Fisher.
Philip Fisher, the
Ken
son
Fisher, I
of
think
Kenneth
son
Fisher.
of
Kenneth Fisher.
Yeah. He wrote a book about this inflation thing, and he do study. He actually said that statistically, inflation go up, the share price go up, stock market go up. Yeah, I remember that book. Yeah.
Okay, great.
But as I say,
MG.
theoretically, it shouldn't So look at two sides So
Yeah. So I think in the same book, you also mentioned about investing pitfalls, which is lesson 9, right?
Yeah.
And one of them was, you stop sharing your public stock portfolio, right? So walk me through that decision. That's very interesting, because for a long time, in fact, you made a name for yourself in i3 because you shared your public stock portfolio, but then suddenly you stopped. Why was that the case?
actually, I want to share with you my portfolio. Actually, wanted to share with you my portfolio.
Oh,
Okay.
I mean,
Sure.
Anyway.
Like now?
please, like now.
Yeah.
Okay.
Yeah, sure. Yeah, man.
Yeah, but let me answer your question first.
Yeah, for sure.
Yeah, I wrote so many articles. Last time I used to share what I invest. Then I get feedback, good lah, and learn, you know. But I also once in a while I give courses. Sometimes I give stock pick service. There is a certain extent when I am criticized. Right? There are people who took my portfolio, say 10 years ago, say, "Hey, you're lousy investor." Why? Yeah, I did invest in some lemons also. But they don't look at the overall portfolio.
Yeah.
Okay. My portfolio could make maybe a CAGR of 50% a year, but they look at a specific stock. Why you choose Focus Lumber? Focus Lumber lost so much money. Yeah, that was a wrong move. But they just pick on things. Pick on all these things. So what will reader think about me? So I could keep on defend all the thing. I mean, very tired.
And you got nothing
I
to
don't
prove,
concentrate
right?
You got
on
nothing
my
to prove,
for you to
KC.
prove anymore, right?
Actually, we are very aligned with you, KC, because there have been a lot of requests even from our followers to publish our portfolio, and this is the same dilemma that we face, because there's this term in English. You heard of this term called nitpicking or not? They just want to prove themselves right. They just want to nitpick certain things, and then like what you said earlier in the podcast, you said, why should you be spending your time? They're not paying you. They're not helping you get a better or happier life, and yet you have to spend time to go and defend your thesis.
Yeah,
What for,
very
right?
tired, very tired now.
Yeah.
And why? I mean, why should I? Even I provide my portfolio. There are still people saying, how much you invest, how much you make. I mean, I'm not here to go and provide you with all this proof, right? So, but actually, you look at i3, I got a lot of my public portfolio. Actually, I have quite a number, right? My latest one is 2019, My latest one is 2019. So I thought I was sharing with you one.
No, you can share with us after the session. We can insert it into the video or something later. I'm pretty sure people will be interested. Leave your comments. Leave your comments in the comment section below, guys. If you're listening to this, if you want to see KC Chong's portfolio. But I think I feel this is an important topic, and I just want to read off the few reasons why you do this. So to give everyone context, the first one, you could be wrong in your assessment. You might have sold the stocks thereafter, and you change your investment decision as one, and you do not wish to update anyone or justify those mistakes of my action. At least you are willing to do that. Second thing is, your personal risk profile and time horizon is different from yours. Yeah, so because the person who is at 20 years old looking at your portfolio, he says, why is kcchong buying REITs? You see, for example, the third is the holding period of the stocks I buy are unlikely to be the same as yours.
Yeah.
Okay. In fact, different stocks of mine are being held at different holding periods. The holding periods also change as circumstances change.
Yeah.
And why do you need to go and update? Because unless they are paying you millions of dollars to manage their portfolio or something, then maybe you can consider. Okay. The third is the kind of businesses I'm interested in is different from yours. You may be interested in construction because that's where you cut your teeth as a civil engineer, and then some people don't like it. The other one is the last one. I think is very important. My knowledge of other companies is limited, and there could be many other better companies to invest in. And then when you share your portfolio, people get into silo mentality because people are born lazy, Casey. You and I know that, right? A lot of people don't want to do their own homework. They just want to copy someone else's portfolio. But then when something goes wrong, they would like a punching bag and someone to blame. I think this is something very important, and I like to highlight.
Yeah. The other thing is that why should I show my portfolio? I'm not trying to entice you to invest with me.
Yeah.
No, what for? No. But if I'm a fund manager, probably I have to show I don't know I know that I have to prove to you that I'm a good fund manager. But I'm not going to invest for you. You simply come to me. So why should I show you my portfolio? To show you how rich I am. What for? What for? Right?
True.
Yeah.
I don't
Oh.
think the super investor. I don't think any super investor show their portfolio. Also, you talk about Warren Buffett. I don't think they show. Only people go and dig the
Yeah,
information and then
correct. You're
show
right.
it. No,
Because
I don't think Warren Buffett show. I don't think like others super investor they show you the portfolio. What for?
they are
Yeah.
actually the portfolio is being shown because they are mandated by law because of 13F filings. But it's not that they go and showcase the portfolio on show. Yeah. MJ.
Great. Yeah. So I before I move on to the another part, right, is let's talk a bit. You started off with talking about how you were more quantitative and you gradually shift to qualitative, right? But let's go back to quantitative. What are some of I know the metrics you use are a little bit different from what you read in books and what you see in forums and i3 and all that. So maybe what is your favorite metric right now to look at, that if I throw you a stock, a name, that's the first two metrics that you zone into for you to say, hey, okay, maybe I can analyze further?
Number one, of course, you qualitative, you got to look at that. But quantitative metrics, number one, topmost is return of capital, whether it's ROE or ROIC. That is the topmost. If a company can earn, I just said before, if a company can make high return of capital, if it grow, best still. If a company can make high return of capital and grow, you will fire 100 backers. You may fire 100 backers, 10 backers,
Yes.
100 backers.
Correct.
Especially if coupled with cash flow. Of course, in growing company, young companies, they may not have good cash flow. Then but for ordinary companies, especially mature companies, look at RO return of capital, right? And then cash flow, of course, growth. These are three things. ROE,
I see.
growth, and cash flow. Maybe in that order. But for young company, high growth company, then look, they may not have good ROE because they probably reinvest their money in the business. So then you look at the gross profit. Gross profit. In fact, in my, I don't know if you look at my Facebook or not. Recently, I wrote a few articles about this quantitative metric basing on Co-I's principle. I come up with this kcchong's ultimate formula.
Yes.
I look at companies, right? Whether it's good companies, I look at this field, ROE, easy to compute, ROE, cash flow in terms of how much the cash flow from operation compared with this net income, right? And then growth, and then gross profit, right? And then balance sheet, debt to equity not too high, that is good for a company. Borrowing is good for a company because cost of borrowing is cheap, but not too high to the extent that you can have the risk of bankruptcy in terms of financial and economic crisis. That is a quality aspect. Then I have the quantity aspect. I use simple one, P ratio and dividend yield as the valuation. Right? The other thing I like about is the Joey Greenblatt. Joey Greenblatt magic formula. Yeah, which evaluate at the firm's level. Very simple two metrics. ROIC and earning yields. But at the firm level, ROIC is EBIT, enterprise value. ROIC is return of operating profit divided by
Invested capital.
Invested capital, right? Then earning yields is EBIT divided by enterprise value. That is Joey Greenblatt's magic formula. I have used Joey Greenblatt's magic formula principle most of the time. I find that it's very useful, right? Very useful. In fact, recently I start screening using. In fact, in my book you can find that I have actually this magic formula screening. Not screening. That one is picking stocks and use magic formula principle to get a score. You look at the list I have and compare now. Actually, very good return compared to the market. I mean, there's short period won't tell you much. But right. So these are the two things. My KC ultimate formula.
Nice.
KC, KC Chong. The other thing is Joey Greenberg's magic formula.
Great. So speaking of some of these stocks that you've been screening, right? I want to go into some of the opportunities you personally are looking at right now, whether it's certain industries or certain stocks. So you want to share with us really what is getting you excited right now?
US market. US market. Plenty of opportunities, whether you go and look for value stock or growth stocks, right? And there are some circular trend now, and stocks you can find from US. Talk about the war on cash. The war on cash. And I hope you understand what I'm talking about. War on cash. The e-commerce, right? The technology, the cloud business. Those are circular trend. I believe will be a quite long term, right? Those stocks in this sort of industry, I tend to look at those established stocks rather than those
and coming.
the coming up, the new one, where a lot of them don't even earn money yet,
Yeah,
but the valuation is 30 times sales. The kind of bit. The one I cannot invest. But if you look at following those trends, those circular trends, you have some very established stocks. I think long term is still very good, because they are still growing, right? Still growing very fast, and they have a lot of cash flow, free cash flow. The valuation is not that high.
Correct.
Even 20 something, 30 something. Hey, for that kind of high growth company, PE 30 is nothing,
Yeah, exactly.
Right?
Especially when they're growing year-on-year CAGR revenue of 25-30% year-on-year.
Yeah.
It's insane.
And
You don't get kind of growth in Malaysia.
They have big moat, They have big moat. So
exactly.
Yeah, US market, I always say go US market. Of course, Malaysian market, there is some speculative kind of gains also, like you invest those industry at the right time, like now, things like those the bulking kind of stocks,
transportation stock,
but the it will be very short term. I mean, short term, we're talking about 2-3 years, short term.
Yeah.
People talk about
not
short
the
term is
10-year, 20-year compounders.
Yeah. So those kind of stocks, I think still can make money. Actually, there's some stocks. I do have some stocks which I think in the short term, 2-3 years, can get good return, very good return. But you're talking about long term, I think you have to go to US or China. Of course, China, they have their own problem.
Yeah, of course.
Their own problem.
Okay. We're looking forward to that portfolio after this podcast, right? Okay, so let's shift to something very different, which is you teaching, right? So that's where both of us have a lot in common with you, which is we teach hundreds or thousands of students before, and in your years of training all these value investor wannabes and all that, what are some of your biggest discoveries teaching other people?
Biggest discovery
Yeah.
in what, in stocks or
teaching people
the experience of teaching. So maybe, for example, do you realize that investing to teach it is very, very difficult, or you find it very easy? How do you find the reception of your students? Do people, let's say out of 1,000 students you teach, I don't know how many number of students you teach, but let's say out of 1,000, how many of them take it like duck to water, or how many % actually fail? Okay. And if they fail, why do they actually fail or not do well?
Yeah, before I go to that, I forgot to tell you one thing upfront now. Actually, I find what you are doing is very good. Very good. Okay.
Thank
very
you.
Good in there is really short of the the proper kind of courses which teach those who want to learn about investing. Very few, seriously very few. Of course, there are some new ones. There's some young ones also. They are quite good. But I think yours is very good. So keep it up, but at the same time, earn some income, and keep it up. Very, very good.
Yeah.
Now, in teaching people, I started this quite long ago, probably about 10 years ago, start teaching people. I think Nicholas Orr is one of them in my first batch.
I see.
He used to say that before that he followed me in my blog, all those things. So Nicholas Orr is an exception. One of the big problems with the youngsters now, those working people, is that they don't have time. Okay, they don't have time. Even I can't get my daughters to learn about investing. No time. I'm busy. I am busy. But people like Nicholas Orr, yes, busy, work hard in this. But at night, he go and study, learn about investing. Because it's important. A lot of people think that I'm working, I'm very busy. My work is more important. Hey, your personal finance not important. So you got to convince them. Your personal finance very important. Right? You want to get rich or not? You want to be good retirement, or you want to get fired or not? Right? I mean, financial freedom and
fire.
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 So you got to instill in them this Not easy not
Not easy.
So depends how you do it
Yeah.
That is one of the problem. Another big problem is that actually how many people believe the right way of investing is useful.
No.
Not
Very
easy.
few.
Very
I
few.
tell you, very, very few. My classmate in MU, engineers very bright one, John, yeah? Very bright, right?
Yeah.
A lot of them are first class honors, second class honors, second upper. When you talk to them about this investing, no use one.
Exactly.
Or some simple principle in finance, they can't grasp it one,
Yeah.
They can't grasp it one, For example, like time value of money. Why you go and forecast earning and then got discount back? What for? What are you trying to do? They don't understand, simple
I'm loving
time
this.
value
I'm
of
loving
money.
this.
Yeah, that is another problem, right?
Yeah.
Young people, no time. All the thing. Even intelligent people, the mindset they don't believe in it one. My WhatsApp group, my MU group, last time 1 year ago they talk about today I buy this one, I bought Top Globe $20, I sell $20 and 20 cents, I make 20 cents, I make $2,000. Wow, I'm happy. The next day go up to $25. Oh, I buy $25, I make another 20 cents. Oh, later go $30, I make 20 cents. And after that $30, then drop the share price on. No sound already. Are they still keeping? You're still keeping, So they think that this is so easy to make money. What the hell? I'm gonna learn from you about fundamental investing, mindset. Even intelligent people. So like what Warren Buffett said, it's not the IQ, it's the EQ, something like that. Whether you have the kind of mindset, just like religion, you whether you believe or not believe. Right?
Yeah.
Right?
It's very aligned to
true.
ironically very religion.
So
yes.
these are the hurdles, and I read before, I don't know whether it's true, 90% of retail investors lost money.
No. I don't have evidence like you as well, but based on the sampling that MJ and I have and your sampling, it's very true because, like what you said, it's people just even my family members, some of them, when I tell them, oh, you have to go through this structure, you have to put in the time, do due diligence, right? No, just give me what to buy. That's the normal thing, They will just ask you, just give me what to buy. Even worse is when they come up to MJ and myself, it says, hey, what do you think of this? There's one time, KC, just to share with you, there's one guy, I WhatsApp him and say, hey, what do you, have you started investing? Then he WhatsApp me back. He said, what do you think of this company A? I said, oh, I don't know. Have you read the annual report? And then he replied me back, no. And at that point, he already had 30,000 ringgit sink into this company. So, but he's asking my opinion after sinking 30,000 ringgit into this company. So that's a very common thing that MJ and I
what's the mindset of people in the stock market? So when people ask me, do you play in the stock market? Do you play the stock market?
Yeah, very common.
That is very common now. Do you play or do you gamble in the stock market?
Yeah.
Play is a common word.
Yeah.
I say stock market is for playing.
Yeah.
And then a lot of this, I play a lot of golf. A lot of this golf kaki in Malaysia. Sometimes we just happen to talk about stock. Hey, don't talk to me. I lost so much money already.
Oh
Don't
yeah,
talk to
yeah,
me.
yeah.
They lost money already. They have this mindset. Oh, I also got one here. Is that, Casey, I don't know why you say you can make money one. I lost so much money. My CPF money is from Singapore. My CPF money last time I play the
Play the
the
market.
second Singapore Malaysian stock. What do you call that? The Singapore
SGX,
listed in Singapore.
Singapore Stock Exchange, SGX.
Yeah.
Yeah.
Yeah, I lost so much money. I don't know how you say you can make money one. Then say now ask me, hey, what stock you buy? Can you tell me what stock I buy? Then I get my research to buy. I think what like that one? You ask me what stock to buy. So that is actually very common, very
Yeah.
common. So in my student, I got maybe 1,000 or something like that. I can tell you, maybe I think it will be less than 10% who really go deep into study, and there are 5% of them actually very successful. Okay, very successful. I tell you, some of them they are doing fund management. Some of them they are doing, of course, not because the length for me lah. They have the other traits lah, other traits
Yes.
which they
Yeah.
make them very successful very few, a few percent. I would say a few percent very successful.
Understand.
So-
It's how much work they put in as well, Casey.
Sorry.
It's how much work they put in as well.
Yeah.
Not just
Yeah.
it's not
Yeah.
just waiting to be spoon fed. Even though you may impart your knowledge, but they have to equally put in the work. I think that's what you're trying to imply as well.
Yeah. I mean, doesn't mean that you put in work, you make money lah. But for example, like you buy 10 stock, you put in a lot of work, study, 1 or 2 stock, you will lose money one. Okay.
Yes.
Okay.
Yes.
3 or 4 stock, maybe even. Then you got 3 or 4 stock make money, and that 3 or 4 stock make money, make a lot of money.
Correct.
And when the 1 or 2 stock you lose money, you lose a little bit of money.
Exactly.
Then your portfolio will be doing very well already.
Exactly.
It doesn't mean that
Exactly.
all the top 10 stock you'll make money.
Yeah.
See or not?
Exactly. Yes.
So
Yes.
true.
Yeah.
So true. Okay, I think we're almost at the end, but I want to have one final question, which is what is one thing that if you were if you're in the education ministry, right? And what would you do to improve the financial and investment literacy of Malaysians? What would you do if you can create a curriculum, have some sort of law, you're the dictator, you can change something? What would you do?
I think FIRL is doing very well on that. There are different ways of doing lah. I think a different way lah. Actually, I follow some other school of thought lah. Like I don't know, about VIC club, VIA club,
Value Investing College, VIC.
or some other very good young investor. They're talking about growth, all those things. Now you can teach them about how to look at business, how to look at the that good company, that kind of thing but I think one of the most important thing is that these people must learn about some very simple thing how to understand a business. How to understand a business is very hard for us to go and talk to the bosses or talk to the CFO, all this thing but how to understand the business, what we can do is that learn about how to read financial statement. Okay, income statement, balance sheet, cash flow. These are all very important. In fact, in my finance curriculum, this thing is very small, 0.001%, but this is the most important part of it, right?
Correct.
Most important part of it. The other thing, you got to encourage them to how to, read annual report. They have to read report. How to go about reading report. Section by section. What is important, right? And then, of course, financial statement analysis, right? How to look at the like ROE, how the company growth, and that kind of thing. And then the other thing, which some good investor would differ. They said, don't care a company good, high good company, just buy any price. But to me, I different. I like to have a feel of the value.
Yeah.
When I talk to my good friend about, I don't talk to him actually about discount cash flow. I never talk to him, but sometimes he tell me, "Well, what is the use of discount cash flow? Ang Kok Hing, you know Ang Kok Hing, you know?
Very familiar. What?
Ang Kok Hing, Philip Capital.
Yeah. I think I've seen his name in the article before.
He wrote some comment. I asked him to. He was my classmate in MU lah. My MU classmate is a mechanical engineer.
Okay.
He wrote the forward for me.
Okay.
I also never talked to him about discount cash flow. When he talked to me, he said first thing that, what is the use of discount cash flow? I understand a lot of people don't use it, don't like it lah. No, I understand. Okay, but for me, I think it's also important. At least I know a few of what the company worth lah. Right?
Yeah.
Discount cash flow, I do it all the time, but that is not how I make decision to buy. But I just make a check and a feel of the value. So that is a bit different from a lot of people. Maybe because of my training lah. I got a finance degree. So I did a lot of present value
calculations.
Those kind of things lah.
Yeah.
So very important. They must be taught how to read financial statement, right? Not just income statement. A lot of people just look at net income, earning per share. This next quarter must be higher than this next quarter. I'll just look at that, right? But you got to look at other things, like the balance sheet. Whether is it the company is risky, because take care of the downside first, don't buy those company with a very high debt, which can go bankrupt during financial crisis or economic crisis. You see, cash flow also very important. I just told you about London Biscuits. So good, but you look at free cash flow every year losing money, right? Same thing, KNN, same thing every year losing money, right? So that's very important.
Great.
Financial statement, annual report, right?
Yeah.
And of course, they have to do a lot of reading themselves, a lot of reading, spend money, attending courses like FIRL, right, and many courses. Actually, the money you spend on learning the other thing, I don't know how much, few $100, 1,000, 2,000.
We
Small
only
money,
charge
but
less
you're
than
investing hundreds of thousands.
500 ringgit only. So
and you're investing hundreds of thousands. In the future, you're going to be million. And then you don't want to spend a little bit of money to learn about it. Or spend some time to learn about it. And remember the statistic: 90% retail investors lose money.
Exactly.
Do you want to be one of them?
That's a very good way of analogy.
Yeah. That's and with that, I think this we certainly have to bring this podcast to an end. However, if someone wants to find you, KC, how can they find you, and where can they buy your book?
Yeah, too bad I have. Okay, let me find a good angle.
Actually, my books are
the
in
first
Shopee.
book.
Shopee.
Shopee.
But this book, can you see this book or not?
Yes.
Yeah, that one. Yeah.
I have some books which I have autographed. Those people who want to autograph copy can email me lah.
How do they find you? What's your email?
You use my address, CKC. Now, I give you the address.
Yeah. We will
CKC
put it
Invest.
into the comment section.
CKC Invest. CKC13invest @gmail.com.
Okay.
All right.
Autograph copy.
Autograph copy. So for those of you've heard it from KC, if you want an autograph copy, get in touch with him.
Only this book.
Yeah.
Only this book.
Which
The
is
other book
complete
you go
value
buy.
investing guide, right?
Yeah, the other book can buy from Shopee.
Okay.
Free postage, very cheap only lah. That's why I don't understand. A book $50, $60 it's nothing. Where you can learn a lot of things, but people just don't want to spend.
That's how people price knowledge lah. That's how we think.
Yeah,
about
even
it.
your course or our course, I tell you, people below 1,000 ringgit also complain. Why should I pay courses? Everything I should get free. Yeah. Okay lah.
Hey,
be my guest.
take my words. You are doing a great job. Okay, and I think you should do some marketing on that. Get people to attend. Actually, benefit them more. Of course, you earn some income but you benefit them more than whatever.
Yeah. Thanks.
And,
MJ, before you end, I want to use this opportunity because I've been trying to get Nicholas on the podcast, KC, because you mentioned his name. Somehow he has got no choice but to come. Hopefully.
Yes.
Kcchong's best student. Get him. He's very good in overseas market.
Chinese and US.
In fact,
markets,
I tell you, I started to invest in Hong Kong just a few years ago only. And he's my master. I follow him.
Nicholas, you heard
And
that?
I make very good return. I would say very good return from Hong Kong market
Great.
because of
Great.
him.
Yeah.
Yeah.
Casey, would you be open for another round 2? I've enjoyed this. In the future,
Well, I don't know whether I got
Podcast.
anything else to benefit you or not.
but who knows? Maybe
No,
you
we will
learn-
think of the topic. No worries.
We will think of the topic. We will probe you. Don't worry. Maybe when you write your third book, then got topic to talk about already.
Well, I'm okay lah. Chit chat with you guys. Make myself feel younger.
Yeah.
And then I believe we are right. Same minded lah. Same mind of the same mind. It's good to talk to people of the same mind.
Yeah.
Chit chat a little bit.
All
Talk
right.
nonsense a bit.
Yeah, definitely looking forward to it, Casey. And for those of you all listening, I hope I'm very sure you guys enjoyed this very frank, very down to earth, but also very high quality podcast. And if you guys enjoy this sort of content, remember to check our other podcasts out on Spotify and YouTube. And I'll see you guys in the next one.
Thank you so much, Casey.
Thank you for having me.